In the last 2 years, Amazon has fallen by 60% and rebounded almost completely. Right now, the price is $181. Guys, it got to $188, give or take, on what date? Here in our software, July 13th of 21. So almost 3 years now, 2.5 years. It fell all the way to $80 a share, roughly a 60% drop. Now, was this the buying opportunity? I don't know. But right now it's at 181. And I'm sure there's a lot of people out there kicking their little tails going, why didn't I buy then? I'm not saying this to talk anything about Amazon's valuation quite yet. But what I am trying to explain, every individual stock can have a lot of volatility. That's what's especially important to understand. In any given year, we have no idea where any individual stock is going. But in the long run, where the profit goes, the stock will go. As long as you pay a reasonable price today. Amazon has absolutely changed the world. There are very few companies you can look at and say, this company changed the world. The other day I was driving and there were 3 Amazon trucks in front of me, 3 of them. And I was driving thinking to myself, what if Jeff Bezos never left his job? What if he never got the funding for Amazon? What would we be doing now? Would it just be a bunch of companies just selling on their own websites and that's it? Would somebody created their own kind of Amazon? Literally try to imagine that world right now where there's no Amazon. You know how spoiled I am? I literally go on Amazon and look for something and go, oh, I have to wait till tomorrow to get it. I love the fact that I can sit there and go, oh, cool, it'll be here by 4 to 8 tonight. Click, bought, and then it usually shows up even before then. That's what's incredible about Amazon. And I love Jeff Bezos for saying, guys, I don't worry about what will change in the future. I worry about what will not change. And I know 2 things. People will always want things cheaper and faster. And that's what he's gauged his business on. But before we get further, we have to ask the question, what's the appropriate price to pay for Amazon? The story is phenomenal, but as Professor Oswald says, a story without the numbers is just a fairy tale. And we have to be able to pay the right price for Amazon today in order to take advantage of that growth and that hold on the entire US economy. 50% of all online retail sales are done by Amazon. 50%. Guys, the entire internet in the US and 1 out of every 2 transactions or dollar amounts is done by Amazon. Can you imagine that? No wonder it's a multi-trillion-dollar company. It's incredible. But I got some stats for you that might kind of shock you for those of you who haven't watched our channel before. Check this out. Now, first off, this is from the 10K, Amazon's 10K last year. Here are their net sales, North America, International, and AWS. What's AWS? Amazon Web Services, their cloud computing. Fast-growing, high-margin business. So high margin that Microsoft's in it, Oracle's in it, IBM's in it, Google's in it, everybody's in it because it's like 85, 90% or more margin. It's absolutely incredible. So what are the sales? Last 2022, $315 billion in North America, $118 billion international, $80 billion in AWS for a total of $514 billion. Fast forward, $353 billion in the US, $131 international, $90 billion AWS, $574 billion total. Now, these are the year-over-year percentage growth rates or declines. This is interesting. 21 to 22, international had a slight decline. But guys, overall, these are great growth rates. Really solid for such a big company to grow that fast. And guys, as the internet grows, you better believe all of these numbers are going to increase. And my guess is these are going to increase the most. Amazon and AWS. Sorry, international and AWS. Those are absolutely going to increase the most because as Amazon expands worldwide and starts to compete with, for example, Mercado Libre in Mexico, these are the things they're going to take over. Here's what's interesting. Operating income and loss by year. North America in 2022, lost money. International, lost money. AWS, made money. Fast forward to 2023, America made a little bit of money, $15 billion, quite a lot actually, a big swing. International still lost money. And AWS, another increase here in profit. Now look at this. Their revenue went up 12.5% on AWS, and their profit went up about 10%. Kind of surprised by that with such a high margin business, but there's obviously reasons for that. But overall, guys, look at this. $12.2 billion in profit to $36 billion in the consolidated operating income. This is all before interest and taxes. I always wondered, what did I miss about Amazon? Because I really missed on it. I was looking at this company and I was going, okay, This gross margin here is awful. This is car company margins, 16.3. Bottom line margin, 4 or 5%. If you hit everything here, including this, I'd say, oh, this is Toyota, this is GM, this is something like that. What people have said to me is, Paul, you don't get it. I don't get it. Their gross margin is 40%. I'm like, what? 40%? That gross margin means every dollar that comes in, they make an extra 40% on. 40 cents on that. So I thought to myself, okay, maybe because of AWS, that makes sense. But guys, you saw our last stat here. A $10 billion increase in AWS led to a $2 billion increase in operating income. I mean, yes, some of that's going to overhead, but that's probably 40%. How can the overall company be 40% when its smallest division is still not getting there? So I was like, okay, wait a second. Now what else? So I pulled up their costs as a percentage of sales, all right? So first off, cost of sales, your cost of goods sold, direct costs associated with selling the product. Big number, 56% in 2022, 53% in 2023. Okay, so they were able to save some money there. Fulfillment. These are the direct costs to fulfill those shipments, everything, labor, whatever the costs affiliated with that. Now remember, it doesn't include building infrastructure, building those buildings, nothing. Decrease there. Technology and infrastructure. This is where everybody tells me, Paul, they're spending so much money on tech, on growth, on infrastructure. Guys, it's only 14% of their revenue. Now sitting there going like, so wait a second. This is only 14%. Look at the other categories. Sales and marketing. I mean, you're not going to chop that. General administrative, you can't change that. It's employees, it's buildings, it's insurance. It's things like that to operate the business. So I'm like, okay, so this 14% here, 14.9. It actually went up. Let's say it's 15% overall. So let's say they have 15%. Well, guys, they're always going to have something. It can't go to zero. Let's say it goes to 5% because they're so amazing. All you did was save 10%. So 16% gross margin goes to 26%. Guess what Walmart's at? 25%. So I'm looking at it going, okay. Now, how can this go up higher? AWS. I do believe AWS's gross margin is much, much higher than the regular business. But for this to go to 40%, when AWS has to be the majority of their business. And the other thing is, guys, 15% isn't going down to 5%. I'm being aggressive here. Amazon has to be on the cutting edge of all technology and infrastructure. They have to be. So this is going to be a cost that's going to be huge for a long time. So again, did I misread Amazon? Absolutely. But do I think some of the Amazon bulls are being a little too aggressive about it? Absolutely. So what does that mean Amazon's worth? Well, I'll get to that, but I want everybody to remember something about Amazon. Back in 2000, before splits, Amazon was $113 a share. By the end of the crash, it went down to $6 a share. So first off, I want everybody to remember, put yourself in the position. What happens if a company you love and believe in falls 95%? It's easy from this environment where we see stocks go up. And when they fall, they jump up immediately. It's easy to sit there and say, I'd hang on to it. I believe in Amazon. Guys, if you believe that, I'm really sorry. I'm really, really sorry. You're in for a world of hurt. And I don't mean that as an attack on you. I mean that this is human nature. I feel like I have a good grasp of my emotions. If I saw this happen, I would be like, I am absolutely wrong on this one. Guys, I have 2 stocks that I bought and made money on. And I was like, holy cow, was I wrong on those 2 stocks? I have 2 investments I lost lots of money up, and I go, I'm going to end up being right on those. But if you think for a second that if you bought Amazon on a story and the hype of the future and you saw a 95% drop, that you'd stick around with it, I'm sorry, it's not going to happen. Now, what did Bezos say after this? He sat there and said, listen, our stock fell 95%. But when I looked at all the numbers of the business over those years, I'm like, our business is getting better every single day. That's the point. The fundamentals of the business will drive the stock price. This $6 equivalent to today is 30 cents. So if you bought it at this point right here, how much of it? You have 500 extra money, 550, right? Even if you owned it right here, this 113 divided by 20 is $5.60. You've still 30 extra money. It's still a lot of money. But you got to remember, this is what gets people out of stocks, even though the business fundamentals are what matter. We've all been there. We've all felt lonely. Look at these companies and go, man, the stock is falling. Why is it falling? And when it starts to fall, it gets even worse. What happens? The media comes out. This sucks. This sucks. This sucks. This sucks. Because news follows the stock price. It's easy to sit there and talk about Bitcoin. It's the greatest. Why? Because it's up to $70,000 per Bitcoin. It's awesome. It's amazing. I'm right. Told you. Okay, maybe. But just because a company goes up doesn't make you right. And just because it goes down doesn't make you wrong. What matters is, are the fundamentals getting better, and did you pay the right price ahead of time? And handling your emotions is the most important part about investing. I say this in every freaking video because the more and more I learn about investing, the more and more I believe it. You are going to use these fundamentals to make a decision on buying. But once you've made the purchase, as long as the fundamentals continue on a path that has your margin of safety in there, you're going to hold on to it because of your emotions. Now, watching this happen would have been tough. Why? Because the fundamentals weren't great from a profitable standpoint. They didn't make money for years and years after this. So in a normal company, like Amazon recently, going from 180 down to 80, if you truly believed in it, that's when you bought more shares. And I'm sure there's a lot of people watching right now going, I truly believe in it, I bought more shares. And that is awesome. And when the stock keeps going up, it's easy to say this number, this 16% gross profit is correct. But again, I'm pulling the layers back just a little bit, saying, wait, what is going on with the 16%? People say it's 40. How does it have to get, what has to happen for it to get to 40? And I'm looking at going, I don't see how it gets to 40 today. People are saying, no, it's more like 40% today. Can I understand when somebody recently said to me on Twitter, no, Paul, it's more like 25%. And I was like, probably not. I'm looking at it now going, yeah, maybe it is. They might be right. That makes sense. I can see 25% happening from 16 or 11%. I'm like, okay, that makes sense. But at the end of the day, every investment is the present value of all future cash flows. The same fundamentals are going to make you look at this and say, what's the real number here as they reinvest? What's the real number of their cash flow because they keep reinvesting that CapEx? What are the real numbers? After you've made that decision, you've got to be able to emotionally stay in it and say, I'm not going to react to Mr. Market. Yes, the stock's at 180 something today. But what happens if it falls to 50? I'm not saying it will, but guys, crazier things have happened. Who would have thought Peloton would go from 180 down to 5? Carvana went from hundreds down to $3 or $4 and back up to 60. Markets are very, very volatile. At the end of the day, what you need to bank on is what emotions you need to work on in order to get there. And guys, I've said it 1,000 times. This is where you go to handle your emotions, the community. That's why I created it, because I wanted a place that investors could stop feeling that lonely road. They could have thousands of like-minded people who disagree with you and agree with you. There are people in here who love Bitcoin. I don't agree with them, but we still have a great time talking. And that's the point of it all. If you have the right like-minded people around you, when things get tough, you will have the people to help support you. So that if Amazon goes from 113 to 6 again, you'll understand, hey, I was just wrong. This company's not worth it. Or you know what? I'm still right. I'm loading up some more. So guys, click the link below. Join the community. It's $7 for 7 days. It's a no-brainer. It'll help you with your investing by helping you manage your emotions. Now, with Amazon's, let's look at analyst estimates over at Amazon. Okay? Let's see what the analysts are saying. And these are guys who are paid money to really dig in these companies. Look at this earnings per share growth. 369 and 925. Almost 3x, like 2.5x. Guys, that's incredible. Guess what? If this is true, you absolutely should pay more for this company. You can't treat this like a 15 PE. And I believe that about Amazon. It's an incredible business. I literally wake up every single day and go to my door to go, what came in overnight? Because I don't even remember what I bought from Amazon. Toilet paper, toothpaste. I probably bought something that's showing up that day. I'm sure you're out there like that too. Why even go to the store anymore? This company has changed the world, and you absolutely should pay a premium for it. But don't pay too much. That's what makes investing hard. Let's see what the revenue growth is. Wow, still double digit. Still double digit. Big time. Going to $1 trillion in revenue in December of 2028. 650, 720, 807, 900 billion, $1 trillion. $1 trillion, guys. That's an incredible number. So, what's the right price to pay for our good old Amazon? Let's go to our stock analyzer tool. Let's pull up our history on Amazon and see what I did at last. I did it February 14th. Happy Valentine's. If anybody can tell me in the comments what Happy Valentine's is from, I will be very, very impressed. I want our staff to make sure you look for any guesses in there. And if you're in the community, tag me and tell me what it's from. So, guys, revenue growth. Now, I did 10-year analysis here versus the 4 or 5 years analysts have. I did 4, 7, and 10. Now, you might be like, well, Paul, they're expecting 11% by analysts. I get it. And maybe I'm being too conservative. by all means. I don't know what to tell you. That's all the more reason to join the software. It's hard to sit there and determine. It's an imprecise art. Valuation is an imprecise art. This is the hard part about it. Profit margin, bottom line, is getting better. 3.7 over the last 10 years, 4.2 over the last 5 years, 5.3 over the last year, 7, 12, and 17 I put in here. Because guys, if AWS kills it, that could happen. I doubt it, but that could. If AWS continues to be a big part of their business and growing, that's very likely. Maybe this accounts for some of my low revenue growth numbers. Same with free cash flow, I kept the same. Now PE, guys. Before I put 17, 21, and 25, and same with price of free cash flow. This is what I did on Twitter. So guys, this is what I posted. What price to earnings multiple do you think Amazon deserves for its valuation? So guys, 14 to 16 got 8.6%, 17 to 20 got 19.5%, 20 to 23 got 34%, 24 plus got 38%. So the vast majority thought, listen, this is a great company. And I don't necessarily disagree with them. So it actually changes what I'm going to do here because I want to follow what you guys are saying. So I'm going to put a low of 20, a middle of 23, and a high of 26. Because I like this idea. Now, I'm only going to put in 9% desired return so that we have intrinsic value. What is the value if I paid the market price for it? If I got the market return? That's the way I look at intrinsic value. This is what I put in here. This does not have margin of safety in here. You need to do that on your own right here. And remember, we need margin of safety because valuation is an imprecise art. We're humans, we make mistakes, and we have no idea what the future holds. We can just make guesses that are hopefully educated guesses. So I hit the analyze button, and this is where I have a problem with Amazon. A low price of 75, high price of 350, middle price of 178 with no margin of safety. So even with your rosiest assumptions of what's the right price to pay for Amazon, I'm probably wrong. My watch list at 100. I should probably put it higher, but I just don't think it's at today's price. Guys, if you want to see a video on the 30 stocks I do want to own in the future, check out our next video, and I'll see you in the community after you sign up.